Welcome to the Alpha podcast, hosted by Stephen Goldstein and Mark Randall. We are delighted to be sponsored by the esteemed Society of Technical Analysts, the STA, a not-for-profit body which explores and educates people on all aspects of price action in the markets. We are also delighted to be promoting their brilliant home study course, which is based on their diploma program, which has been delivered at some of the world's top universities. You can find out about obtaining a discount on this home study course by going to our website alpha-mind.net and scrolling down to the section on the Society of Technical Analysts. There you will find all details about how you can obtain a discount on the price of this brilliant learning program. Now on with this week's podcast.
Okay, well, welcome to this week's Alpha Mind podcast, and we're delighted to have Greg Newman with us. Greg is CEO of Onyx Capital Group, historically a crude trader, energy trader from the Manadara business, but now actually running a shop that I think we need to find a bit more out about to start with, but also to see how they're literally energizing their team to perform in the space as well. And certainly that fits in with some of the agendas we've had for other conversations on this podcast. So, Greg, welcome to the show, and perhaps just give a little taste of just your history and how Onyx came about and why it came about and just what it does.
Okay, sure. Yeah, thanks for having me. Onyx is a market maker ultimately in the oil derivative market, which we can get more into complexities around it and all that. But essentially, I started my career off actually at a company called Gazprom, which is a Russian company, oil company in London, since kind of closed down or renamed. But I moved from there to take a junior trader role at a company called Manadara Capital, like you pointed out. And the interesting story there was that it was kind of a startup trading operation, but the owner was a ex-banker, Goldman Sachs, Morgan Stanley, and he set this operation up as one of, the very first independent oil derivatives trading business. Oil derivatives were previously, ran by the banks, and the timing was so good because the banks were being kind of forced to pull out, or certainly were having to be restricted because of rules kind of from a hangover from the financial crisis. That and a combination of the exchanges starting to list, all these very niche oil contracts as futures. So as soon as they did that on the exchange, it kind of changed the game completely. It went from a market that was really ran by the big boys. These contracts were heavily linked to the physical. That was, to trade them, you needed all this information on assets and be a BP or a Shell type. And all of a sudden you could be an independent trading with, these huge industry players. And the market has evolved immensely 12 years later. And we took our place at Manadara Capital, as very young people under Alf. But, such was the inefficiencies and gaps and the vacuum in the market that we built it into a, burgeoning, huge volume business. Has grown, exponentially in volumes and the number of contracts. And we were the largest volume players then, and kind of Onyx has taken that mantle since. And that's kind of the general summary. So I started there as a junior trader working and developing under Alf, and, getting stuck in then and it's, not looked back since.
No, and were there any sort of characteristics of your trading or lessons learned during that very early time that you feel really defined, how you grew as a trader?
Absolutely. So I guess by the ethos of the business, it was a startup with the owner, Alf Salty, his capital, right, ultimately. So it was at risk, and he had very young people trading. And so he wasn't willing to put a lot of risk on or allow us to have a lot of risk on at an early stage at all. In fact, it was very restrictive, but in a positive way. We were still ultimately contributing and getting to dip our toes, but it meant that we were hyper focused on risk management. And I would say whatever else, that was what was drilled into our minds day one. And, to this day, I don't think that kind of disciplined risk management teaching has been matched, certainly in the oil market. And I would say me and my business partner and others who were there and grew up during that time, we massively benefited from this this approach. And it was very ruthless, pure trading principles around stop losses first, capital drawdown first, having an exact appreciation of what your downside was, and then looking for smart, consistent risk reward strategies that would compound over time, and not getting ahead of yourselves in the wins, and not getting too fearful of the downside, because you were very well prepared. And things around that, it was, I could go into a lot of detail about that, but ultimately that was the best possible training. I think what's the opposite? You join a big shop and you join a desk that's taking considerable risk and slightly looser risk management framework and a lot of capital to risk, and you only know how to trade and develop under that. You only know how to trade that way. But it means that when things are tight and things are restrictive, you really struggle. And we see that all the time. Big traders coming to work for us. We're an independent shop. We don't just allow like huge swings against assets or huge balance sheets with low sharps. We expect rigorous discipline and compounding performance. And I think people think they know they're going into that and can handle it, but it really gets shown to you. The curtains get drawn. After, were you at a bank where there was flow? Were you at a trade house where there was physical pricing? Like all these things around making money that people don't fully appreciate gives you a leg up. Once you strip all that back and it's just you and a piece of paper and a new strategy, it comes down to your risk management framework. So that's absolutely what my career has been kind of started with as a foundation and built from ever since.
Yeah, and I guess that with that, the agility, and I guess the being allowed to be creative as well, and have an interesting methodology of hitting a very broad market without so much limitations that you have in a big shop, I guess also must be something that benefits the way your business operates.
Well, I think it's the ruthless approach to trading in the sense that you get these, well, from my understanding, you get these in a lot of industries, but certainly in oil, there's a stigma and a status quo about how things should be done. And that's the classic old boys club. And you're looking at, 5 or 6 people in the market that I was trading that basically dictates 90% of what's going on, which in turn dictates, 70% of the world's crude prices, which is insane to think about it. But there was a very particular way that they viewed the market. And it was this is how I don't know how to say it, like big dogs trade. This is the way to do it. Shoot from the hip. You've got to know about the physical. You've got to know about your fundamentals. And these things might all be true, but you're missing the pure trading side, which is, flows, positioning. It's really understand how your contracts price so that, maybe you're only picking up pennies, but you should never turn down any money, right? And ultimately, that approach, I think, was very against the norms for the oil industry and gave us a big leg up. We weren't blindsided by that kind of stubbornness. We were just willing to just look at the market at face value, and as you say, be creative about any way to generate that return. Whereas I think there's definitely, even to this day, an implication that you have to do it a certain way at a big shop, if you like, or a BP, a Shell, a Trade House, a Vitol, Traffico, these types of places. They're getting better and they're starting to diversify their way of thinking and a lot more quantitative. But, in the last 12 years, it's been a bit ridiculous, just ultimately how stubborn they've been that oil markets are a certain way and they're not a financial market, they're a physical market, and there's a derivative market linked to it, but it's all about that physical. And every day that gets proven wrong. And the bigger the financial market gets, the more energy and commodities behaves like every other asset class in foreign exchange, equities, you name it.
Yeah, I can sense there's this sort of degree of passion about being in this niche, and I think you can tell that you've got this your own sort of sense of energy from being able to operate in the way that you do. I want to reflect back a little bit on risk management, given the fact we have a very broad audience, from people that are starting to people that are well and truly knee deep in the space. But if you were giving some sort of sort of basic rule of thumb to follow in terms of appropriate risk management for traders, are there any sort of lessons or sort of guidance that you're happy to share as some fundamental principles, for example?
I mean, there's a lot, but I guess if you're starting fresh, it's understanding how to manage your capital. The idea of, I think a lot of people is, you have a certain capital base, and that could be £1,000, or it could be, $1 million, but it's ultimately when that is given to you as a drawdown or your own self-enforced drawdown, you can't be risking that all at once. And ultimately, there's got to be an appreciation right from the off that it's not about being right or wrong. It's about creating a repeatable system. Now, even if that is ultimately a discretionary view, trading a discretionary view, you can still be systematic about your tradecraft, about your risk management approach. So, even if you have £1,000, you want to at least be splitting that up into £100 trades and at least have 10 goes at the market. 10 goes and you being wrong 10 times out of 10 probably says a lot about your trading and analysis and back testing in the market, or at least something's going wrong there. So that as a basic principle, I think potentially not very well understood by a lot of people. And then when you're going into markets, it's I guess it depends where you want to start. But for me, it's what I see probably the least of, which you should do the most of, is focusing on your stop loss, right? I mean, engineering a stop loss, creating that stop loss based on, sound principles of the market, volatility, liquidity, slippage, whatever it is, whatever maths you use to determine that, standard deviations, ATR. You need to get an appreciation of what the market can do as quotation marks noise. Appreciate that your stop needs to be just outside that as a kind of basic principle. And then if you start there, marry that with what you're willing to risk as a drawdown, that will give you a volume in the market. And then you go out and say, okay, what am I actually expecting this to do? What's the performance I'm expecting from this trade? And when someone really holds you to account like that, you might find yourself saying, okay, I can understand what you're saying. An appropriate stop here is 50 cents, it's arbitrarily saying. And then you say, okay, what about your target price? And then you say, well, I think it's probably going to go up by 25 cents. He said, well, you just got a completely skewed risk reward profile there, but you wouldn't know that if you didn't start with the stop first. And I think that's what a lot of people, and I'm telling you, even the most experienced people struggle with. And if they say, yeah, but I still believe in this trade, you're saying, well, it's just not got the risk reward framework. So you need to be thinking about what exactly is behind this, and maybe you've missed the trade and that kind of thing. So I think those kind of principles to start with, if it's frustrating for people, but I think it's because there's this natural, when you're into trading and you've got an idea, you've got a view, you naturally get a bit of FOMO. You want to put it on and you think, oh, I'm going to miss this trade or something. That's the general feeling, which is good, right? It shows you really believe in your trade. But if you really do the thinking behind it methodically, and it shows that it's ultimately not the right trade on a risk reward basis, you shouldn't be afraid not to do it, because any experienced trader will tell you there is always the next trade. And it's a very hard thing to accept, but it's the truth.
Yeah, I think anyone listening to this that's looking to set themselves up or to review how they approach the market, and we hear a lot of those stories come back, should just replay what you just said, because it's really important to understand those principles. That it's not so much a game of luck; it's a game of chance, and understanding the possibilities and probabilities is really, really important, and having structure around that and process around that with the right mindset in the first place, I think is something that we can see from our experience of coaching seems to be ignored by most. People focus on the too much perhaps on the analytical side, and not enough on the way they do things and why they do things.
Well, I think there's a belief when you do and have analysis that, I guess the fundamental belief is you can figure out something someone hasn't looked at. And therefore, when you believe you found that thing, you believe you can't be wrong. And this is why a lot of our teaching ultimately came down to, not directly, but implied kind of stoicism, right? Ultimately, humility and thinking, what's really going on here? I am just another person, maybe not average, but close to average, let's say, that has every possibility of being wrong. And I've got to do the work to make sure I can stack probabilities in my favor, but I have to accept randomness and that I might very well be wrong. And I actually think it might sound obvious, but it's it's in people's heads, especially when they start, and sometimes a lot longer than that, that they're still protecting their sense of ego of, no, I have to be right. And it is irrelevant. What is right is your process. And you can have a good loss trade. You can lose on a trade and it be a good trade. You can well risk manage, well crafted. And that, I mean, let's be honest, that's not exactly, would you even say that's 50% of traders? I mean, there's a lot of ego in trading. And I go back to my point that I said earlier, which is, if you're being honest and true, again, with those kind of humble kind of principles, what is driving your trading? And if you're sitting in a bank and you go on about how much money you make, but how much of that is coming from customer flow, and you might say things like, yeah, but I've accounted for that and I've accounted for this, but you haven't accounted for the mindset behind that, which is, there's a lot of leeway in your own head, right? Like if you've got $2 million of customer flow sitting at a bank, you can afford to lose $1 million and still be up one. I mean, that's a very different position to be betting your life savings on a trade in a retail format, if you see what I mean.
I want to just touch on mindset, since I think we've both brought it up and not necessarily sort of described it, but from your point of view, and I guess from building a team now with Onyx, in terms of mindset, what do you see as the an optimal mindset? We know there's variations of it, but perhaps let's talk about some of the qualities from a personal point of view that I guess you like to see in people, and perhaps also what you've seen being a mindset that perhaps is a successful mindset to apply to this world that you operate in, and perhaps some of the qualities that have turned up where mindset hasn't been quite as it should. And how that's led to people that have, had significantly poor performance compared to others. Do you have any view on mindset?
Oh, I've got loads. I mean, that is what we've almost looking at people as a trade in itself.
Exactly.
We've had so many people through the door, assessed people, something like 2,500 to 4,500 people we interview for one role here, that's the applications we get and sift through. And it's a very, well, at least from our point of view, we've put a rigorous methodology into the type of people we want. And you have to start with a certain amount of competency, of which we define by, basic mathematical skill, being comfortable with numbers, communication, things like that, reasoning, concentration grids, all this kind of stuff. You just ultimately can't get around that. There needs to be a level of competency there. But beyond that, we distilled it into resilience, humility, and accountability. And again, rather than saying that like wall art kind of virtue signaling type stuff, we were very serious about it because if you break it down, and again, the testing around the assessment centers, and even when you're in the business at the early days, what we're looking for is, to begin with, it's monotony. Ultimately, you come in and you're doing trade entry or you're analyzing and you want to go for it. You're young, and particularly the young guys, they want to get in and get stuck in, but there's a lot of monotony before you get there. And you've got to build those neurological pathways. You've got to do the grunt work. You've got to do your time. And a lot of people don't want to accept that. So you can combine all those things. Ultimately, first off, do you have the humility to recognize the position you've got and the opportunity you've got? And can you see yourself as not even nearly the finished article and willing to learn off everyone? That's not the same as not having confidence. You could be highly confident, maybe too confident, but if you still believe I'm always an open book, then by definition, you can take in your learnings and you're not stubborn, and you can build on any weaknesses. Or as I say, that's a really, really key bit. And I could go on about that for a long time. But the other one is resilience. And I don't mean resilience like, again, like you're going through some fire and you've got to just grit and go through it. It's actually a more boring version of that, which is staying true to the process, which can be monotonous, and it is frequently monotonous, especially in the early days. As I say, you have to build those foundations, and there's an element of keeping in your head, I believe in this, I believe I'm in the right place, or I believe in my training, or I understand that this is how it's going to be, and just taking every day as it comes. I think that's more important than people realize. I mean, especially, and I was the same myself. You just got your belief that you're going to come in and be the best young trader that's ever existed, and it's kind of what you expect from a trader, right? And to a degree, maybe we want that, but it is stressful because you're then faced with a period of monotony. And then the final one is accountability, which is, ultimately trading is brutal, but also very true and fair in the sense that, it comes down to a P&L and a process, and it will always humble you over time if you think you're better than you are. And ultimately, if it's your learning, or you miss something, or you don't understand something, or you couldn't convert something into a trade, or whatever it is, you have to bring it back to what can I control. And you'd be amazed at how hard it is to find those three things in combination. We have to go digging into their story and on their CV, which, most of the time they're not even aware they've kind of betrayed themselves. In their CV, they're trying to present the best version of themselves. But you go into certain interests and how they've set themselves up in their lives, and it's usually quite telling. Like, for example, we had some of the good ones. We've had people who say, I've been working at with a charity every weekend for 3 years. What the hell? I mean, that's great. I mean, that's amazing in terms of like, from a virtue moral point of view. But interestingly to us, that's probably very boring. And sense of like, commitment to something, sticking it out for whatever reason you've chosen is very, very interesting. So that would be something that would stand out, as opposed to I played rugby. That has its own benefits, but you want to kind of get across, are they fitting this mold that we've created, which we have seen translate into very successful people. And some people think they display certain characteristics, but when they're in the game, it's just nothing what they realize. And it's the best we can do is to distill it into these things. But people surprise you all the time. We've tried psychometrics, we've tried analyzing the patterns of certain behaviors, and those are the only three consistent things we can see, because everything else is, you look at our traders and talk to them, they're so different from one another. Gregarious, confident rugby players with nerdy kind of like barely speak English, whatever. Like it just doesn't seem to correlate other than those three principles, which is pretty fascinating in itself. But I can only speak for Onyx, of course. But when you say mindset, I mean, I 100% agree in that. First and foremost, you can teach anything if people have got that kind of that clay to work with.
We're going to go back to the podcast in a second. Just first, we want to tell you about a new initiative we are doing with the Society of Technical Analysts. Alpha Mind will be delivering our first high-performance trader learning program, and it's going to be delivered by myself and Mark Randall next year, starting in March 2025. This program is based on over a decade of successful performance, coaching programs and workshops delivered by us at some of the world's leading hedge funds, some of the world's top investment banks, and several of the world's top energy and commodity trading firms, as well as to serious-minded professional traders, including several who featured in Jack Swagger's most recent Market Wizards book. You can find out about this program by going onto the Society of Technical Analysts website at the link technicalanalysts.com, and then go into their education page. As we said, this is a 10-week program delivered on Mondays UK time between 6 and 8 p.m. It's going to be delivered live over Zoom. Enrollment is limited to just 25 participants. Now back to this week's podcast.
No, I know that you've taken it perhaps a stage further than most in terms of bringing in a head of performance from F1 into the business to, I guess, to nurture this talent, to perhaps be part of the process to identify it in the first place, but then actually to, as you say, to craft it as a piece of clay or a piece of plasticine into something that is the best version of it can be. Perhaps if you can just share some of that. I mean, what does that process involve? What have you seen as a dynamic that's come from that investment in your talent?
Well, what we're trying to do there is, again, separate the technical. So we've got actually technical. Someone technical in now as well as me and Omar and others who will obviously focus on attracted to the way these guys are developing, and that's the new age. And that's not how, I and maybe you guys saw markets, 12 years ago. It's, the swingers, the Wolf of Wall Street type stuff, the bankers, the liars, pokers, that stuff in their mind seems just dead, or not. They've never even seen it. So they coming into a slightly old school market, don't get me wrong, but they don't seem swayed. They actually seem that, if anything, they're the ones to make this change, which is very inspiring. Actually, I love seeing it, and I really want to encourage it, because they can be the same thing that we did at early stages for the oil market. They could do that again, if you know what I mean, take it to the next level again. So I think, in answer to your question, I mean, once we get an element of digitization, that's one thing, but I think, we spend $80 million a year on brokers, which is just ridiculous. I mean, that's just so much money on intermediaries that it's not, if you say a broker in another asset class, you probably expect someone who takes the other side of your trade. It's not. It's someone who just matches you with someone else and takes zero risk. So what are these? This is like real estate agents of oil and of oil derivatives. And it's a weird part of the market. So we know that's got to go. It's just how we do it. There's a lot of legacy stubbornness in the market you wouldn't believe. So you're up against that. Where AI and these kind of things come in, I personally have seen AI have a function in research, particularly supply and demand modeling, using things online, collating a lot of different information online from multiple different sources, bringing that together. I think AI is very effective at that. But we've had this discussion quite a lot, and ultimately all it's really doing is playing into our hands, because we don't hold physical assets which have information. But the more democratized, the more that AI can bring, this previously incredibly high functioning research, or hard to get your hands on, hard to develop internally, suddenly it's applicable to everyone because of the journey AI is on. That essentially erodes the edge of the traditional, asset owner or whatever. So actually becomes more about trader psychology and the principles we've been talking about, which is how we want it, right? It's about pure trading ultimately. And I think that's exciting for us. Whereas AI for trading, I personally think it's going to be very good at going previous days up to day one. It's not going to be very good at predictive, because the whole point of being predictive is looking back historically. So you're just going to be on this loop of being very good at engineering the past of how trader psychology was. But the whole point of forward testing is how the trading market is now. So in a way, you're making all these kind of decisions so democratized, like, everyone buys because supply and demand balances are, showing a supply deficit. But all those decision making in one will just happen so much more efficiently. It becomes about, when does markets become too saturated and people stop out, and these kind of things. And I just, that's always evolving. I don't understand how AI will be able to solve that, but I could be wrong. But that's kind of how we're looking at it.
No, so it may optimize sort of the engineering of the process of trading to some extent, rather than be the forecaster of exactly where we're going.
I mean, one thing that's taken my interest more and more as we've developed and become more of a powerful player, if you like, and you understand more of the power players influencing the market. OPEC, for example, they are very clued into the market in the sense of sentiment. That's actually what they're doing these days. They change their production levels in their meetings, but they know it's about what they say they're going to do rather than what they actually do, because these things take months to play out. So you see the markets moving around, and the concept from those price movements, you get headlines from, quotation marks, leaked information from influential sources. They're trying to game the market sentiment. And what's AI meant to do about that? It's people reacting to price movements and then making a headline or a statement. What's that got to do with modeling? Do you see what I mean?
Yes. It's the more we talk about it, with our mindset and our lens, it doesn't seem to have a seat at the table. Ask an 18-year-old; they might have a different point of view. That's evolved. That's what evolution does, isn't it? It's something at some stage might happen, but
of course, it's at some stage when it's in AI is taking the same discretionary decisions and autonomous decision making as we are. Fine, but I don't think it's language models, right? It's still at this stage. It's not a fully autonomous thinking situation. I think I'm no expert on this, by the way. Everybody gets slated on
this. Maybe talking but I think it's still worth just sharing those points. And don't discourage, the mindset of the new people joining, to actually feel that they have.
Well, that's the whole point. We were those people when we came in and was like, you don't know what you're talking about.
To listen to them is important.
But that's how we made a career. No one wanted to listen to us. And so then we made it. So, I hope they're the same. And I hope that they can do that for my business and keep fresh ideas. And I agree with you that you've got to embrace that.
Yeah. Wonderful. Well, perhaps as we have got to right to the time, if you'd like anyone to find more about Onyx, where can they find you? Where can they track some of the discussions that you're no doubt leading in the market?
Yeah, so we're big on this. We've got, as I said, the retail offering coming soon, which means anyone can get an account with us, much like an IG index type thing. That's coming very soon. So I think if you just type in Onyx Capital Group on Google, obviously you can find our website. But we've got World of Oil Derivatives is also our SEO. We've got a lot of. That's the name of my book that I've written about oil markets. That's the name of our podcast channel where we've got us talking about many different things in the oil market and the macro markets, and that's a constant feed. And we have a platform as well which people will be able to access widespread. So I think keeping an ear out, and Onyx Capital Group will get you there. Don't get me wrong, if you type Onyx into Google, a lot of random stuff comes up, unfortunately, and Onyx is a popular word. But I think we're very findable. World of Oil Derivatives is definitely the key word that I know will turn up a lot of things. So maybe that's the one.
Wonderful. Well, Greg, it's been an absolute pleasure having you on. I'm really just getting such a broad perspective of this market that, to be honest, many people don't know much about. And given the opportunity that's there, perhaps they need to put some effort in and take a look. And with some of the thought leadership that comes out of yourselves and other similar players in the market, I'm sure that could inspire them to look, think, and perhaps even trade differently. So many thanks for being on the show. And for the moment, we wish you well.
Thank you very much for having me. Thank you.
Thank you for listening today. Again, thank you to our podcast partner, the Society of Technical Analysts. Do check out the offer with regard to their brilliant home study course. If you are interested in understanding more about yourself as a trader, do check out my new book, Mastering the Mental Game of Trading. In the meantime, we wish you the very best of luck and look forward to you joining future episodes of the Alpha Mind podcast. Goodbye.